I own about 10,000 units and I've raised billions of dollars and run a 300-person real estate operation. And I do it in just a few hours a week. Most investors are drowning, exhausted, and glued to their phones 24/7. The difference is not money. It's not deal flow. It's 7 systems that almost every large-scale operator has, and that almost no small investor ever builds. In the next 20 minutes, I'm going to break down all 7 of the exact systems that let operators like me scale from a couple hundred units to thousands without working 80-hour weeks, without being the bottleneck, without my business falling apart every single time I take a vacation. And by the end of this video, you'll know exactly which system is missing in your business and why that one system is the reason that you have not scaled. System number 1, the core idea is you don't scale until the roles scale. So what does that mean? Here's what small investors do. They hire randomly based on pain. We're drowning, so we need to hire X, like a property manager. There's no clear KPIs or key performance indicators, and everything still flows back to them. So in contrast, what large operators do is they build an org chart before they build the team. For example, at my company, we break down every single person by department, and then we have their roles and responsibilities inside that box, and then we beat that up to try to make it as detailed as we can. So not only does everyone understand what that person is going to do, but the person that we're hiring completely understands what their role is. So for example, in acquisitions, that's sourcing, underwriting, broker relations, travel, all of the things that are needed so that by the time we get a deal to our investment committee, it's ready to go and fully explainable. Asset management is performance, KPIs, weekly meetings, and physical plant. So, for example, how does the property look? How's the paint? How's the roofs? How's the parking lots? Those are things that largely the property management company does have, but the asset management is responsible for that. They're also responsible for the investor relations and, of course, the lender communication. Those are typically in the asset manager box. So in a lot of small companies, asset management, property management, construction, renovation, finance, accounting, investor relations is often on just 1 or 2 people. And so it can be really, really confusing. It's really, really important that these roles are all defined. So one of the things that I do understand is before your company is big, it's small. And so a lot of times these things do land on 1 or 2 people. And you definitely wear a lot of hats. But it doesn't mean that you shouldn't start with a definition of what each role means, because as you scale, you're going to see that you're going to be more defined. Also, you're going to see what you're particularly not great at. So that's the other piece. In most cases, 1 person or 2 people aren't great at everything, but they're really, really good at a few things. So this also helps clear that up. So there are numerous examples of people that I call bottlenecks or control freaks or whatever, where every single decision has to go through them. And I believe that almost everything that exists is admin, literally admin. But there's a lot of CEOs and high-level execs that literally have to have everything run through them, from fonts to colors to brochures to marketing plans to budgets to hiring, all of those things. A lot of the problems can also be in the delegation. So you think you need more deal flow, but what you actually need is an org chart so that you can understand how the deals flow. System 2, the deal flow engine. So the core idea is scale requires a machine, not relationships. And you can break it into all kinds of things. When you're finding deals, sourcing channels as an example, brokers, off-market, direct-to-owner, wholesalers, joint venture partners, debt brokers, landowners. Those are all places that you can go right now to bring deal flow into the company. 2 is the underwriting team, of course. So large operators don't underwrite deals personally anymore. I certainly used to when I started, and you probably should know how in case you hire an analyst or somebody that's doing it for you, so you can just question their work. But it's not that hard to take all the information from rent rolls and financials and all that stuff and to put it into some kind of forward-looking cash flow. But then the hardest part, of course, is taking a look at the assumptions. But I can tell you at this point, Ross and I both, when we're in our 1-hour investment committee each and every week, these are all done for us and we're just looking at the final product. Number 3 is our pipeline infrastructure. So Tuesdays we do a 90-minute meeting each and every week, and that's just with the executive team. And that is for our asset management and property management companies only. So in that meeting, we have our scorecards, our KPIs, and each person has 2 or 3 that they are accountable for each and every week. And we also go over the quarterly goals. And then inside of those goals, we have milestones. So every single person has a goal. So for example, one of those might be to find one 250-unit property that we buy in that quarter, as an example. And underneath that is a whole list of milestones of things that the executive team can now challenge that person, whether it's the acquisition person, the CIO, or whoever, where we are in that timeline for that process. 4 is the always looking advantage. When you're always underwriting, brokers take you seriously. When you're writing offers and communicating and emailing, they always take you seriously. So you should always be in deal flow mode. This is where the rubber hits the road. So a lot of times I find people that ask me, how do you get deals? And I always say, how many lists are you on? Because every single day I get 8, 10, 12, 15 deals sent to my inbox. Now, most of those are quick no's because they're not the size I need, they're not in the market I need, but you kind of get the point. I'm on every list I can because I want to see as much as I can. Whereas small operators oftentimes are out there trying to find deals, which is totally fine. There's nothing wrong with that, but it's much, much easier if they're all hitting your inbox because they're not all off-market deals. So it's not uncommon for a small investor to just have a few deals every few weeks. Whereas for us, we are looking at anywhere from 50 to 100 deals every single quarter. So if you aren't underwriting 5 to 10 deals at least every single week, then you don't have great deal flow. You have deal hope. Listen, if you own a few hundred units but can't seem to break through to thousands, I know exactly what's holding you back. It's not that you can't find deals, and it's not that you're not working hard enough. The problem is you're still trying to do everything yourself. And that approach that got you to a few hundred units, it's the exact same thing that's keeping you stuck right where you are. So here's what nobody tells you. Scaling to thousands of units is not about working harder. It's about building the right team, structure, and systems. So I manage 10,000 units and about 300 people just in a few hours per week. Not because I'm special, but because I have a specific org chart, systems, and investor relations framework that does the heavy lifting for me. And of course, I built all this from scratch, and you can too. So I want to show you exactly how it works. So I'm opening up my boardroom for just one day to 19 real estate investors. And you will get my complete playbook, my org charts, the systems, how I raise capital, how I structure my team, everything. You'll be able to tour my office and meet my people and see them in real action, real time. Plus, you'll get a 30-minute private call with me, and that alone is worth more than the investment. Only 19 seats. Click the link below to see if you qualify. So let's get you to 1,000 units. System 3, asset management rhythm. And this is where investors lose millions. Break down the weekly, bi-weekly cadence. There are certain KPIs that you must track. Here are several that we track each and every week. Occupancy, pre-leasing, delinquents, turnover timelines, renovation progress, number of work orders, net operating income to budget, CapEx, variance or capital expenses, traffic sources, where they're coming from and are our marketing dollars working, and of course our closing ratios. And these are just some of what we track each and every week. And because we track them, we've identified certain goals for each of those. And when we're below the goals, we pin them and discuss them and talk through them. And when we're above the goals, we praise the team that beat the goal. So here's a pro tip. One of the things that we do when we're tracking KPIs or key performance indicators, it entirely depends on the asset that you have. So let me give you an example. If we're building a new property and we open and we're 100% vacant and we're trying to lease up within a certain period of time, our KPIs are very different. They're leasing based, they're tour based, they're marketing based. Not as much on the expenses, but we do track the marketing costs and all of those things. Typically, an issue with a lease up has way more to do with the marketing and the traffic than most anything else. When you're stable, your KPIs are going to be very different, especially after a lease up. Because after a lease up, now what you're trying to do is you're trying to bring those units to market rent. And you're trying to stabilize the expenses, because what you're trying to do at that point is you're trying to replace the construction debt with permanent debt. And the only way to do that is through stabilization. And then the next step, of course, is cash flow for the investor. The KPIs can vary from asset to asset and situation to situation. So it's very important that you design your KPIs to fit your property. The asset management is not a meeting, it's a pulse. When you ignore the pulse, the business flatlines. System 4, investor relations infrastructure. So let me outline some small investor behavior. One is bad communication. And a lot of you guys are seeing that right now. In other words, everything's great at the property. The next month, you need a cash call. That's poor communication or not enough communication. Second are late updates. That can be through letter writing. That could be through phone calls. It could be through Zooms. It could be through financials. But late updates, oftentimes we see with small operators. So disorganized financial and updates only when they're trying to raise more capital to find a new deal or maybe even to help an existing deal. The large operators are very, very different. Large operators like ourselves, we have monthly financials and we report to the investors quarterly. So we are reviewing our financials every single month with our property management and asset management team. And then we produce a letter to reflect those reportings each quarter with templates to the investors in an investor portal, complete with a CRM or customer relation manager, and of course, an investor reporting platform. So these are professional updates that oftentimes includes videos and PDFs. We tag our CRM so we know exactly where the investors came in. For example, a lot of you guys know I do a big conference called Limitless with Tarl Yarber. Well, we tag those people that came in through Limitless, so we know exactly where they discovered us. This helps later to see where we want to spend our time and money. We have weekly and monthly touch points. Now, this usually happens inside of our investor CRM, but certainly in our office, it happens every single day with our property management team and our asset management team. One of the biggest things is that you got to set your investor expectations before you close the deal itself. You definitely need clean portals, fast responses, and transparent communication. So our investor relations team currently has 3 people in it, and they're extremely busy handling very important investor questions each and every day. Investors don't leave because of bad returns always. Sometimes they leave because of bad communication. We just went through a rough period in the last couple of years. I'm talking about personally, and I certainly know a lot of people that have experienced the exact same thing. Because when the mortgage payments went up and cash flow went down, and what happens when cash flow goes down is you return no distributions or very little distributions on something that you said that you were going to do. So what we were able to see during this period of time were some of the smaller syndicators were not communicating very well, and I was getting a lot of phone calls from some very frustrated LPs around those issues. System 5, the capital raising machine. So this is a system that turns your investors into evangelists. So the large capital engine has a segmented investor list. In other words, we know exactly where everybody comes from. We know who they are, and we know what their needs are. There's monthly and even more than monthly value add emails. We listen to them. What is it that you want? What kind of information you want? Now, I'm not talking about the investment that they're in. I'm talking about other things as well. Investor webinars. We do those almost every week. Strong pitch decks that are very detailed. They can go back and look at and challenge you when they get their distribution checks. Huge data rooms. So we have this online. So an investor has their own portal, their own email. They can go in and check their own returns, their own investment on their own assets. And of course, regular updates. And our investor relations, of course, books regular calls with a lot of our investors. And this is how you get repeat investors. In addition to our annual live event, Limitless Expo, which we do once a year. This year it's in Scottsdale in mid-August. So small investors raise money when they need it, and large investors raise money before the deal exists. They're continually touching the investors. So this is exactly why when we typically put a deal out, it funds rather quickly. Whereas other syndicators are often exposed, and these deals can drag out for a long period of time while they're raising capital. So if you can't raise raise money quickly, you'll miss every big opportunity. System 6, property performance dashboard. So this is changing rapidly, of course, with AI, and this is becoming even better. But the large data that large operators have shows each and every day. So we show things like net operating income versus budget, debt service coverage, or DSCR, delinquency trends, occupancy heat maps, lease expiration schedules, CapEx budget versus actual. So in other words, how much big money are we spending on a property to maintain it through asset management? Lead sources, lead conversion, unit renovation ROI, or return on investment, financial stress testing all over the place. These are the kinds of things that you need to be monitoring. Whereas small investors have nothing but emails and spreadsheets, and big operators run like an airplane cockpit. Whereas a pilot doesn't guess the altitude. Real estate CEOs should not guess the NOI. System 7, the CEO system, removing you from everything. This is the emotional core. Small investors do everything themselves. They work 60 to 80 hours a week. There's no delegation. Everything has to go through them. There's no second line of leadership. Their trust level is extremely low. There's no meeting cadence. They're making every decision personally, and they're putting out every single fire, and they eventually burn out themselves. Whereas large operators, they follow what I call a CEO pyramid. They start with vision, and then 2, there's a capital strategy. 3, we focus on talent. 4, systems, and 5, culture. Typically, these CEOs don't manage properties, handle tenants, chase CapEx bids, call investors, underwrite, or run numbers. I certainly don't do any of those, but I have really, really good people doing those things for me because I built the systems and teams already. Let me break down the CEO cadence. We have a weekly leadership meeting. This is 90 minutes. I have a monthly performance meeting. This is also 90 minutes. There are quarterly offsites that sometimes I'm involved in, sometimes not. And we have an annual strategy meeting to set the course of the company for the next year. So in those annual strategy meetings, we have a 1 year, 3 year, 5 year, and a 10-year goal. So let's say, for example, your 10-year goal might be to get to 5,000 units, which might seem crazy, especially if you just have a handful of houses. But I guarantee you can do it. What you do is you start backwards. You say, if I want to have 5,000 units, what do I have to do in the first year, second year, third year, fourth year, and then the fifth year, of course? And all of the components to get you where you need are going to be sitting there in those particular years. Then you break them down into quarters, and then you break them down into milestones, and you start to delegate those things. Then you just manage that data. This is precisely what I'm going to be discussing in our one-day boardroom. So if you guys are interested in this, just hit the link below and apply. We have an application. I'll review it personally. I'll get on the phone with you and we can talk through the details. And how I came up with 19 is that I have a 20-person boardroom and I need 1 seat. So I have 19 available. I hope to see you there. This is March 13th of 2026 in Scottsdale, Arizona with me personally.